Definitions of private company and public business entity. A discussion paper on the American Bankers Association by Michael Gillette, who's the Vice President of Accounting and Financial Management. Page 2. Summary. Under generally accepted accounting principles, the terms private company and public business entity can be important for smaller banks and savings associations. Private companies are often given additional time to implement new accounting standards or other FASB updates. Private companies are sometimes exempt from certain GAAP disclosure requirements. Private companies are sometimes provided options to follow certain private company accounting alternatives. Similarly, for call report purposes, an institution can only use these special FASB private company alternatives if it meets the GAAP definition of a private company. The Financial Accounting Standards Board issued Accounting Standards Update number 2013-12, definition of a public entity, in December of 2013. Adding this term to the Master Glossary in the Accounting Standards Codification. The ASU, which is the Accounting Standards Update, states that a business entity that meets any one of 5 criteria set forth in the ASU is a PBE, public business entity, for reporting purposes under U.S. GAAP, and thus would not qualify for the private entity, also referred to as non-PBE privileges just noted. Upon issuance of ASU 2013-12, there was a general understanding by the FASB members and staff, as well as by certain auditing firm representatives, that the new definition would result in many banks newly qualifying as PBEs. Banks that may otherwise be viewed as private entities are thus urged to review FASB's definition of a PBE with their auditors to determine whether their corporate structure or product offerings will disallow the private entity GAAP definition. Banks that may believe they are private entity based on traditional definitions but are at risk of being considered a PBE under FASB's definition include 1, 2, and 3. 1. Banks of any size that have issued debt or equity securities that can be traded by a broker in the public market. 2. Stock chartered, both C Corp and S Corp banks with over $500 million in assets that are not registered with the SEC. And 3. Banks with over $500 million in assets that have issued debt or specific depository products that can be considered securities. Bankers should first determine whether any issued equity or debt is traded on over-the-counter markets, OTC. In our view, mutual institutions are considered private entities unless they have issued debt securities that can be traded without restriction in a public market. Banks filing under the taxation status of S Corps may be considered non-PBEs, though they must also ensure that effective restrictions on their stock are in place. S Corps that have issued debt must determine whether the debt is traded on public markets, such as some OTC markets. Some have questioned whether certain funding vehicles that banks issue, such as trust preferred securities, True PS, or broker deposits, will preclude meeting the definition of a private entity. In relation to the True PS, PBE status will depend on which entity in the corporate structure issued the True PS. We believe that the issuance of True PS will not normally result in a bank qualifying as a PBE. Bankers are urged, however, to evaluate each situation separately, as well as to consider the other issues discussed in this paper before concluding on their public versus private status. We believe that holding brokered deposits does not affect whether a bank will meet the definition of a private security entity. And for most banks, their issuance of true PS will not necessarily prevent them from meeting the definition of a private entity. We also believe issuance of negotiable certificates of deposit or other deposit products that can be sold by brokers could, in substance, qualify as an unrestricted debt security that is issued by a bank and result in PBE treatment. However, the markets in which those products are traded must be considered public in order to qualify a bank as a PBE. As noted above, bankers should discuss these issues with their auditors before determining whether their institution qualifies as a private entity. That was the summary, but there's one update from previous versions of this discussion paper. This paper was originally published in May of 2016. In September 2016, certain language in this paper was revised to correctly describe call report instructions issued by the U.S. banking agencies that applied to the PBE definition. More importantly is that prior to 2017, ABA and personnel from various auditing firms believed that criteria D and E of the PBE definition could cause the majority of banking institutions in the U.S. to qualify as PBEs. This interpretation was based on public comments and private discussions conducted with FASB members and staff. At the heart of the discussion were 1, the nature of the market in which a bank's securities are traded and the impact that market has on the definition, and 2, a form versus substance analysis of the PBE definition and how it should be applied to multiple entities in a corporate structure. During 2017, per discussions, ABA has conducted with certain members of the American Institute of CPAs, Depository Institutions Expert Panel, and the FASB staff regarding the PBE definition interpretation. ABA now believes the number of banking entities that will qualify as PBEs will be significantly lower. However, ABA urges banks, those that wish to qualify as private, to conduct detailed and periodic reviews in order to determine whether they qualify as PBEs. See how much of the background we can get into. As defined in ASU 2013-12, a business entity is a public business entity if it meets any one of the following criteria. This is A through E. A, it is required by the SEC to file or furnish financial statements or does file or furnish financial statements, including voluntary filers with the SEC, including other entities whose financial statements or financial information are required to be or are included in a filing. B, criteria for being a public business entity is whether it is required by the SEC or rules or regulations promulgated under the SEC Act of 1934 to file or furnish financial statements with a regulatory agency other than the SEC. C, under qualifications for PBE, it is required to file or furnish financial statements with a foreign or domestic regulatory agency in preparation for the sale of or for purposes of issuing securities that are not subject to contractual restrictions or transfer. D, under qualifications for PBE, it has issued debt or equity securities that are traded, listed, or quoted on an exchange or an over-the-counter market, which includes an inter-dealer quotation or trading system for securities not listed on an exchange, for example, the OTC markets. And lastly, E, it has one or more securities that are not subject to the contractual restrictions on transfer, and it is required by law, contract, or regulation to prepare U.S. GAAP financial statements, including footnotes, and make them publicly available on a periodic basis. For example, interim or annual periods. An entity must meet both of these conditions to meet this criterion.